Hello everyone. So I am going to just do a video kind of talking about and reviewing the current price action this week. I do want to try and make more of these. I just don't always have the time, and honestly it really just depends on how I feel. But hopefully you do, anyone watching this, um, you know, get something valuable from it. But anyway, let me get into it. So first of all, I don't really concern myself with the daily chart too much. Obviously, we've had a lot of volatility with one day making a range of 2,600 points over that, which is very crazy, and I've never seen this before. Right? I'm sure a lot of traders can also say the same thing, where this is a very unique time in trading. If you look at the previous price action, the biggest candle I can really see is this one. It's only 1,000, and then this one over here. It doesn't really happen often, but almost every day now we're getting these huge candles that are like over 1,000 points, and it's just, there's a lot of volatility. It's started to die down a little bit, but even then, it's still quite erratic, and we do tend to form larger ranges than we did before. It's been very hard to trade because one of my rules on my trading plan is a sort of range rule, where if I show my trading plan, right here, this is highlighted because it changes. Basically, if I'm trading the 9:30 to 12 o'clock, if a range is formed in 9 o'clock, a certain amount of points, then I don't trade in 10 o'clock hour, and maybe I'll wait till 11 o'clock. If there's news or something, or a reason to do so. And also depends what 10 o'clock does. But because usually that will mean that the sort of whatever price has in mind to do in that morning, whatever liquidity needs to be taken, will have already happened after past the average range. So how do I determine what the average is? Very simply, I just log each day the specific hours. The only really ones I pay attention to is 9 o'clock, but I log a bunch of different hours. But 9 o'clock, I take the average in the past quarter, and then I use that as sort of like, okay, if we do a range above that, I'm going to assume that whatever move happened, either I missed it, or it just didn't, my model didn't show up, or it's just one of those days where there is just no trade, and price is just being erratic and it's trending in one direction, and you just kind of like quietly dismiss yourself. And I did that because it avoids me from having to sit there and decide, okay, do I trade or not? It's a very clear and strict. Like the chart will tell me whether my trade is able to be taken or not. It's not up to me. Ultimately, it is up to me to press the button, but it's up to my rules to determine whether I press that button or not, and not my own mind. Like what I think about what price will do. So anyways, obviously, with the volatility we've had, this rule has not, been working very well because of like the amount of volatility we've had, and I haven't had a trade in the last 2 weeks. There were trades. My model did show up in the past 2 weeks, many times actually, because of the volatility. It's showing up a lot more often, but I have not been able to take it because I was not comfortable with the large range that was being left by price. Like, I'll show you in the past 2 days, but I don't use anything, past bigger than the 5 minute to trade. So that might sound crazy, but let's go on Monday. All right, so we're gonna go to 9:30 on Monday. Now, the first thing I do is I measure the current high and low of the day. All right, so we're gonna take right up here, and I measure 50%. If we're above 50%, I sell. I'll also maybe sometimes use the midnight open, but sometimes the midnight open isn't really in a good spot, and it's not an accurate representation of equilibrium. But price will always sort of like want to gravitate towards an equilibrium, 50% of the day. So if we see prices elevated and expensive, it's going to tend to want to get cheaper and go towards a discount. If it's in discount, it's really cheap, it's going to tend to want to get expensive and go higher. And that's why coming into this day, I would only be looking for sales. Right? But the problem is I need to also allow for my range rule to be met. So already we have a range of 82 points. Currently, at this day, my range was 160 points. So if we did 160 points, I would not look to trade. Right? And when we opened up and we just shot straight down, we got to a discount. Now we took some liquidity, but we didn't. There's still more liquidity to take, and there's a large gap that was left overnight. So we could come back down and fill this gap. I did, if I want to see higher prices here, we've already kind of trended higher and retraced. And so the fact that we're retracing again after just getting above the high of the day faintly is kind of telling me that we're probably not going to want to revisit this too much. We're probably not going to want to trend and expand higher. Now, it doesn't matter. Any of this doesn't matter to what my trading plan is. I'm just saying from a reading price action perspective. But my trading plan doesn't care about where liquidity is. It just, as long as, well, it does. But I mean, like, as long as the rules are met to take the trade, the rules are met. So I'm getting ahead of myself. But obviously you can see that this is sort of forming a sort of market structure shift on a bigger time frame and getting ready to kind of seek liquidity lower. So the problem is, as we retrace and my trade does come, we've already made a range that is at 268 points. So I'm sitting there and I'm like, okay, well, I know, like, I knew in the moment that Monday that I don't think I had streamed, but I knew that I could take a trade and that my trade might be there. But the 268, and it's been like that for the last kind of almost entirety of last week. Like, there are times where I sat there and I'm like, I can take a trade. I know that this might work or that there might be a trade here, but I've had to distance myself or refrain from doing so, just because the range that was left by price is so enormous that I just wait. But I think I've seen it work enough times to the point where now I'm willing to increase my range to 300 points. But that's besides the point. All right, the point is that here I'm sitting here and I'm seeing 268 points of a range at 9 o'clock, and I'm getting kind of scared because usually when that used to happen, a 268 point range, the kind of move had already happened and there was nothing really left for price to do. So anyways, this move higher here, this one pass higher, kind of convinced me, because you see we have a 5-minute short-term high, and that's the first thing I look for is a 5-minute short-term high once I determine if I'm going to sell or I'm going to buy. So as soon as the 5-minute short-term high in the premium gets taken out and we have a potential entry in premium, I'm looking to short. Dropping down to the entry time frame. This move higher that breaks a 5-minute short-term high, all I'm really looking for is displacement. That either means a market structure shift with a large fair value gap or an inverse fair value gap. Now we have this inverse fair value gap, but also this could be like on the 2-minute, right? Not necessarily inverse. So I'd have to wait till the last gap gets inversed, right? The first gap in the range. If they're consecutive gaps like this, otherwise then it's fine. But by the time that happens, like, the risk to reward is not attractive. I mean, especially if my stop loss is meant to be somewhere up here, and I look for the first 5-minute short-term low. If I'm looking for a minimum of 3 RR, which is what I do, this is a very large play, and like I'm not going to try and take that. So the RR is not attractive. But then we had another pass above a 5-minute short-term high. All right. Let's wait till this happens. And mind you, we're still inside, a higher time frame fair value gap. You see how we quickly run above that. And then we started to displace lower. So now you have a market structure shift. you've got the fair value gap here. Another thing I've had to do to kind of change the way I trade is adjust my stop loss size. So before, my stop loss was 20 points, but obviously with how much price is moving, it's very hard to have a 20-point stop loss. And I don't think it's always going to be like this. It might die down in a week or two, and maybe it's soon dying down and it's going to go back to normal. But now I'm finding that 40 points is a bit more realistic. So to try and get a stop around this high, I'd probably ask for consequent encroachment of this gap, because you could get in here, but my stop is way higher. It's unnecessarily high, and it doesn't even have to get up into this gap. So I'd be trying to get a better price for no reason. This could be like a second entry when I get to that point, but otherwise this is fair enough. This might be a little too low if it goes all the way to the order block. So I'm demanding the consequent encroachment, not for reasons to be very precise, but just because I want my stop loss to be in a good position to weather drawdown. Anyways, and we go to basically I look for 3RR minimum, and after 3RR I look at the first 5-minute short-term low. So that would be around these places, but about 120 points. I could have also maybe targeted here. This is a bit more discretionary. I think it's pretty fair to say that it's going to go all the way down here and not just these 5-minute short-term lows. But let's just say for the sake of the 3RR, actually, this short-term low is technically under 3RR, so I would target this one. So whatever. This is a very huge play, like 4 times what I'm risking, right? And I can take 1 or 2 of these a month and be happy. Make more than what I make at my job. So I don't need to really, I'm okay with not trading very much, but I'm hoping that the changes I'm making now are going to help me to come across more trades, because I don't want to go a whole month without trading. So anyways, yeah, that's Monday, and it works out pretty well. It goes much further and it fills the gap, and then we kind of start a discount delivery. So let me just remove all these drawings, and we're gonna go to the next day. Today was a little different though. Today was like I was getting up in the morning and I could tell what was gonna happen. My model was probably not gonna be present, but I was not trading either way because there's news tomorrow and there was no news today. So also inflation is falling quite heavily. I did not notice that. But yeah, basically I'm not trading because there's a lot of news. There's also Powell's speech at 1:30, so I don't know if I'll trade. It really depends how the morning looks. And Thursday it will probably be the best day to trade. But anyway, let's just keep going with the price action. So I noticed in the morning I was looking at the 50-minute chart and I saw this short-term low get ran out and then an order block be created. And immediately when I saw that, this pattern, this down close, continuous down close candles are in a downtrend. Then we have quite a nice up close candle, but we immediately have a very aggressive down close candle with a very aggressive up close candle that overtakes that entire down close candle, the body. So that's like a red alert sign that says that we might be going up. So I go down on the 5-minute, and then we're about 8:45, and I see we have a fair value gap here, and this was left opened, right? So we dropped down into the inverse here, and we left this gap, and I was telling myself this could be a breakaway gap, and at the same time there was a breaker, low, high, lower, low. So I'm taking the up close candles, and that's a breaker block, and this is a breakaway gap, which means it shouldn't get filled. Did I know for sure it wasn't going to get filled? No, but I didn't. But when we're continuously trading above up close candles and using down close candles as support, we're not really digging back into down close candles. We're continuously trading above them very quickly and aggressively and not going back to gaps. This usually means that we've immediately rebalanced price and we're ignoring this balanced price range. We're just gonna go straight to the next liquidity. Um, Mind you, too, getting up above this high would put us in a premium based on what the week has currently done. So if you measure the high and low of the week, then we would be up into a premium, which is a good place for sales. So I'm just kind of waiting for price to kind of show its hand. See if maybe it will retrace and give me an opportunity to enter, but I wasn't trading anyway because of the news tomorrow. And instead, it just completely 930 as I knew it would be possible. Ran higher and then traded far above that high. Now there was no news today, right? But 930 is kind of like news here, right? Price traded higher off the 930 opening, which is mimicked the effect of news. And then there was not really a good trade because, as you see, price does trade above a 5-minute short-term high. But there's a couple things here, right? First of all, 9 o'clock hour, 208 point range. So I could still trade, but again, with the news tomorrow, my rules say no. And then we'll make that the 5-minute short-term high. There was a fair value gap here, and this could have been taken with a 40-point stop loss, aiming for after 3 RRs. Let's go to 3 RR, and then we aim for the first short-term low, on the 5-minute chart, and that's this right, or no, not that. It would be this one right here. That's another 160 points, another 4 RR. So just that in 2 days, I would be up 2 RR if I had ignored all some of my conditional rules, where like, oh, we don't have news the next day, and the range and stuff. But I have a model, and I have to follow it. Now, just because I've seen this working, it doesn't mean it was a good play. Because what do you see price do? It just kind of consolidates and it moves sideways. So yes, like we did retrace into a discount. And I think I would have been lucky to hit this take profit, because first of all, it's not like I'm targeting discount. It just so happened that the 5-minute short-term low is right here, and I would have been able to hit it. But we did chop around after that and didn't really do anything. But we did continue going lower. So I mean, it wasn't. I wouldn't say it was the best condition to trade in, but there was still a trade, and I am kind of a little disappointed that my rules didn't align with these trades. If I have to be honest, but at the end of the day, I mean, it is what it is. It's my model. I know it works, and it might need some adjustments. But one thing I have to be careful with is I'm not just going to randomly adjust things based off what I am currently seeing. I have to gather data and evidence, which is why I'm making a video here. I also screenshotted all these occurrences and I logged them, and I'm making sure that when I look back over my journals, the things that continuously repeat, I will, choose to add to my plan, so that I can accommodate for those things. More often they repeat more and they work more often they actually fail. So it's a journey, right? It's not like I have everything set in stone and it's going to be what I'm doing for the rest of my life. It's a continuous journey of gathering data, and in the process of doing so, I can extract an income from it if I'm smart and I'm careful and I'm responsible. And that's how it's going to work. So anyways, that's all for today. And obviously, we had the current day opening, which opened very, very low. Well, I'm excited to see what tomorrow's going to hold. I'm hoping for some volatility. Yeah, that's it. Hopefully you've gained something from this video. Anyone that watched the whole thing, I thank you very much for your support. Hit the like button, and I will see you next video or live stream.